So feel free to interrupt me as much as possible or as much as you want. I have 20 slides, I think, so I'm going to try to talk a minute probably about each of them, but definitely kick me off and I can speed up through the last few slides if I am running over time. So really a pleasure to be here. I think I've been involved with Silicon Valley Comes To some part of the UK over the last several years, so it's always nice to see, continuously evolve. So I'm going to talk about the evolution of Europe's funding landscape, and I think probably we're in an amazing place as Seedcamp to talk about it because we've been at the beginning of it in terms of the last decade or so. So I think we have a pretty good view of what's going on. I love Twitter. I love Twitter followers. So there you go. That's my little that's my little name tag here. Please do follow me. Feel free to comment on my talk, or if you want to reach out, it's really the best way to reach out, and we can set up a conversation offline or off of Twitter. So onwards. So who are we? We started in 2007 in the dark days, actually the very bright days, literally a month before the crash. So if you're going to raise money, raise it, just before the crash happens. So we are the oldest and the most successful acceleration fund from coming out of Europe. We accelerate startups from prototype to IPO. And we are really after globally ambitious founders. So I think Europe, gets a bad name historically for being very regional or very Europe-centric, and we're certainly kind of opposite of that. So really wanting to back globally oriented businesses and very ambitious talent. So, and I think that goes a long way towards why we have been so successful, because it's the talent that you really kind of hunt for and aim for, and that's what you get, right? So in terms of our track record, we have over 90% of our companies get follow-on funding. That's kind of the historical picture of it. Over our companies, about 160 of those companies have raised more than 300 million in funding, and those are some of the names. So there's probably not a entity globally that we don't know and can't connect our companies into. So a third of our companies get money from U.S. investors, which is a pretty big deal. I think actually more than a third, and it's increasing, and we'll talk about that a little bit. And about a third of our companies are based in the U.S. as well, based in both Europe and the U.S. We love universities. I can't be at Oxford and not say that. So there you go. That's my little pitch for anybody who is certainly Oxford related, or I went to UPenn undergrad myself. I'm American, moved out here to, is INSEAD on there? Did I miss it? Darn. I went to INSEAD for business school. So again, I've got, a lot of love for the university life and the talent coming out. So we funded founders across all these schools and then some. So we definitely love being part of the university ecosystem. What I'm really here to talk about. So I'll start off with, what's been going on. So we started in 2007. Here we are kind of 8 years later. What has been going on in that time? So I think what it all starts with is death of the traditional sort of VC. And we can confidently say death because if you look at that, the number of funds that have actually had closings and have actually raised funds has dropped by 50%. So it was a disaster basically between especially the early years, 07, 08, 09, things kicking back up a little bit more as you can see. But what that did for Europe at least is it made it really difficult, right? The early years of getting companies funded was certainly very difficult. But unlike historically when Europe tends to panic, in this case, in the last several years especially, a lot of different people have stepped in to improve the funding climate in Europe. So the bigger, as the bigger VCs, the older generation of VCs couldn't close their fundings or funds because of performance and because of the financial crisis and so forth, a lot of interesting things started to happen. Everybody started moving into the early stage. So as I lived through the kind of the dot-com boom back in '98 and so forth. And so it's always a cycle, right? So everyone gets bigger and bigger and bigger, crash happens, everyone kind of moves to the early stage. And that's definitely what we saw as well. And especially, 07, 08, just really, really dark times. But as you can see, starting in 2009, and growing, a lot of funds started to participate in those sort of very seed rounds. So Index Ventures seed, Excel seed, Balderton seed, Andreessen seed. A lot of those guys, I'll talk about it a little bit, have started to leave that again, because as things have been getting better and better, you see sort of the unicorn generation, funds are starting to get much larger and larger and being raised faster as well. But so, a lot of those funds started to come down to the early stage, which is where we are as well. And then another thing started to happen, which is the emergence of sort of micro VCs or seed VCs. And this time around, though, what's been great about this birth of micro VCs is it's led by, a lot of the names over there are incredible sort of funds in the sense that not very traditional, banker consultants raising funds to invest in venture capital, but a lot with real operational backgrounds. So White Star was started by Christian Hernandez and a few of his colleagues as well, who came out of either being entrepreneurs or, as Christian, came out of being at Facebook and running international for Facebook. So, real operators. Connect Ventures' whole differentiator is product. They're absolutely obsessed with, they are a product VC. Point Nine is an incredible fund out of Germany. And all of these guys are also quite geographically dispersed. So it's not just centered in the UK. UK is definitely a majority of it. But Point Nine in Berlin, White Star is in Canada, New York, France, and London. Credo Ventures is in Prague, and Passion Playfair, et cetera. In Ambient Sound, which is in Estonia. If you ever want to study how a country kind of leapfrogs innovation, Estonia is certainly a great case study for that. There was sort of this emergence of these micro VCs, and as you can see, just an explosion in the last sort of two years. What else started to happen? So, in terms of funds, the UK government has been, and you'll see my focus is definitely a lot on UK. I'm closest to it. It's also the largest market in Europe, so we do focus on it a lot. But yeah, so the UK government, and it started. I think London is a special place because you have such an incredible city, but you also have central government sitting there as well. So it's been, and with the same party being in power in both the central government and in London, a lot of beautiful things have been happening, right? And so number 10 acted very fast as sort of the financial crisis happened and trying to really kind of ramp up early stage and getting founders or early stage founders funded. So a couple of things to note on that. So the Enterprise Capital Fund is a UK sort of public money, and again it's sort of come into these funds and been behind some incredible entrepreneurs. So Notion Capital was started by the guys who sold Message Labs for 800 million. So all three of those sort of early founders and operators came together. So it's, again, very operator-led. It's very founder-led venture firm. Episode 1, Simon Murdoch and a couple of his partners, again, are serial entrepreneurs themselves, have been very active angel investors for years, and they put the fund together. Passion Capital, Skype people involved with that, and so on and so forth. So huge, it's been great to have public money not in public hands to make really bad public hands decisions, as they tend to happen, but in private hands with real entrepreneurs who know how to both build businesses and also, as angels, have had an investment track record as well. So a lot of money going into that. And then in the most recent kind of last year or so, the things like the London Co-Investment Fund, which essentially blindly invests. If you are, Playfair or Wellington or some of these, again, other well-known investors, they will match 1-for-1. So they blindly follow the investment decisions of some of these guys, and they've done actually really smartly because they don't offer you much in fee if you're running a fund, and they don't allow you to take carry. So it's like really, really well done by, by the London government. So some very smart moves from central government down to city government. So it's had huge impact, which we'll talk about again partly through this. So what else did government do? They put a lot of money out there, but they changed a lot around policy as well, and for good and for bad. So there's been a huge explosion in SEIS funding and EIS funding. If you don't know about it, have a look if you are sort of paying taxes in the UK. This is a great mechanism for you to adopt. You get a huge amount of income tax relief, no capital gains on the results, and you can offset your losses, right? And I think the way I was involved a lot in sort of helping build up SEIS, and the way they did it was very smart. Is it really went towards fast growth, high growth businesses, and really made it difficult if you were just trying, because a lot of money has been wasted historically in much either film funding and things like that, where it was meant for high growth tech businesses and it never got there. So they tightened up this policy a lot more. And as you can see, the average investment per company dramatically doubled, right? It dramatically increased. And that's really important. So what we've seen always in Europe is, UK included, is every startup raises half the amount of money in every single round that their US competitor does, and it takes twice as long. So doubling your average funding round has that dramatic impact. You've already narrowed the gap, compared to your counterparts over in the US, right? So a lot of money has been pouring in. So mostly it's been, I'm very positive about it. It's been great for the entrepreneur scene. You're seeing a lot more entrepreneurs from all of Europe flocking to the UK, setting up, getting the SEIS, EIS funding. But there's definitely a bit of a bubble in early stage. As you can see, if everyone's moving in, there's definitely a lot of money. So what we've seen is there is that Series A crunch, but even also Series B, Series C is very tough to raise in Europe, because a lot of that money has flooded into very early stage. What else is happening in Europe? I actually think this is the most important thing that's happened in Europe, Europe-wide, is we're still about a couple of generations behind, but that generational effect is massive. It's massive so if you look at the top picture with the US and the bottom picture with Europe, is we were a decade behind in terms of those sort of Cisco, HP, those kinds of folks actually leaving, building hugely successful billion-dollar businesses and leaving to do two things. One is become serial entrepreneurs and investors as well. So that's been the most dramatic change, and you can see that we have the first employee ever at Skype who built Transferwise, which is one of the Seedcamp companies, and now we see people leaving Transferwise to start their next generation of companies, right? So that sort of proliferation of entrepreneurs and employees has been brilliant, because you get extremely mature founders and well-experienced founders. Because one of the things that has been lacking in Europe is great talent as you scale. So we've had more risk taking, and with sort of the crisis, a lot of people leaving the city and other disciplines to start up new companies, but that only gets you so far. What you hit is massive blocks around talent, around product development, scaling partnerships, distribution, so on and so forth. So now that you have operators that are experienced in going international, in building products that are in the hands of hundreds of millions of customers, you have a dramatic shift in how they're building businesses and how large those businesses can get. So we're still about 15 years behind, but it's moving faster, and it's sort of incredible to see. So just actually, I wanted to make a note on Transferwise. They joined Seedcamp back in 2010, and again, towards our success, they're the first zero to unicorn out of a European acceleration fund, right? So again, to note, it's happening, it's moving faster, and we're excited that we were so useful and valuable to them in the early part of their journey. So along the lines of what's happening with that generational shift and generational change is, you're getting experienced angels. So again, you're not getting the typical banker. I was a banker, so I'll say it. Typical bankers and consultants investing in those early, in those early rounds and early stages. But you're getting kind of the Skype mafia, the PayPal mafia, Facebook mafia, and so forth, becoming funds themselves. So Atomico, Passion, Mangrove, Facebook. So I mentioned White Start, which should be on there. A lot of these funds are starting to be set up from operators who are part of building those businesses up, and then very active angels. Just three faces down there. Edward Ray, he was the founder and chairman of Betfair, and we've made 5 investments with him. Barry Smith is a angel LP in our fund itself, and so we made a bunch of investments with him, and Errol, who a bunch of you probably know of. So great to have really experienced angels. And accelerators, obviously. There's been an explosion. There's a lot of people who don't know what the hell they're doing. It's so easy to start an accelerator. It takes no real cost to set one up, and you don't really need to do that much to set one up, right? It's very easy to throw up a website that says, please apply, and then we'll fund you. But it's extremely difficult to run a successful one. So we were the first. We kind of know that whole journey of all the bits that are difficult. But there has just been an absolute explosion of accelerators across Europe. It matches, I think, what we see in the U.S. as well. Same level. I think probably the same quantum if you took all of Europe and all of U.S. A lot of the U.S. ones tend to be located in the East Coast and the West Coast, maybe with a bit of Chicago and Austin thrown in, but it really is concentrated on those coasts, whereas in Europe, it's spread absolutely all over. And the European investment body has a lot to do with it. So the kind of public European money goes into a lot of these accelerators from the Baltics down to the Balkans, and particularly Central Eastern Europe. So those 3 regions get a lot of European money. And again, success isn't quite there yet, but some of these are very new. They're 3-4 years old, so we'll see what happens. And for us, we've been having some great successes, funding from some great investors, acquisitions by some great companies as well. Crowdfunding. So actually in Europe, crowdfunding for equity happened way before it did in the US. So again, I think especially in the UK, and again, the UK government has had a huge role to play with that, right? They've really fostered the ability to set these things up and be able to play a role in this space. So we're hugely pro crowdfunding. We're active on pretty much all of those. And what's interesting about crowdfunding is it's a huge shift in how you think about what happens with the day-to-day customer. Your day-to-day customer can now be a shareholder in your business. They don't have to wait till you become Google and become public, or you become Transferwise and are either a multi-billion-dollar business when you go public or get acquired. Like you have customers actually believing enough in your business to become shareholders at the earliest stages, and that is incredibly powerful. So we're huge proponents of it in the right way. Our view is, crowdfunding is brilliant if it's not the end all and be all of your fundraising strategy. If you're including that alongside some really great, operator angels and some really great funds to be able to help you scale your business up. So crowdfunding has exploded, again, with the UK leading the charge and Europe and the US catching up a bit more. Venture debt, which doesn't get talked about much, but it's definitely happening. It's starting to grow again. Lending Club doesn't really belong there, but I put it there just because there are Market Invoice, Lending Club, bunch of sort of B2B lenders as well that are starting to develop. But things like having SVB, Silicon Valley Bank, come into the UK again has been huge in terms of we've had several of our companies get venture debt, and a bunch of these other investors who who are playing in that space as well. So we're definitely seeing some of that grow as well. I think it's still small, so I wonder I don't know what will happen. I imagine it will increase in terms of, if European companies are still having that challenge of Series A, B, C rounds here in Europe. I definitely think this will continue to grow. Yeah. Oh, great. Perfect. So what's also been happening? So I talked about the death of traditional VC, and so, but there are some good names that's withstood the test of time and crisis, and what's happened is a lot of those traditional VCs who survived and excelled have really built towards a more value add VC model, right? So I think people look a lot at Andreessen and what they do in terms of that value add VC model, and you see it adopted a lot with folks like Index Ventures, Balderton, Point 9 Capital, who I mentioned before, and several more. And it's been really interesting because those guys have been moving from up the value chain downwards towards seed, Series A, et cetera, and also adding all of these support services. And at the same time, accelerators, as we all began, had no choice but to have a lot of support services because we didn't have that much capital to bring to the table. So it's really interesting how the very tiny funds and the very big funds look alike in a way in terms of the operational support. So we share a lot of learnings. We're backed by Point 9 and Index and Balderton, so we share a lot of learnings about how we're developing support systems and how we think about providing that kind of support to our portfolio companies. So the one difference you'll kind of see in the acceleration approach and the VC approach is we have to do it at scale because we're investing in volumes of businesses at the beginning. So for us, it's we invest in 40 to 50 businesses a year, and VCs obviously only invest in a few a year. So the approach is a little bit different in how you provide that support. But huge amount in terms of talent, marketing, sales, et cetera. I'm going to clearly go fast through these. So what's been the result? European unicorns. If you think about us being 15 years behind, I think there's some stats around how if you took Facebook, all the European unicorns combined still don't add up to one Facebook. So that's certainly the truth of it. But none of the unicorns would be here without the huge amount of strides and evolution in European funding, right? So it's been great to see those develop. Rocket Internet has been fantastic and terrible at the same time. I won't go too much into that, but I think it did a lot for ambition, right? It really put sort of their model, front and center to be talked about, to be looked at. Some huge companies that they built, and I think one of the things that they did is bring together what Europe struggles with, which is what I talked about, is talent when you're scaling. So they brought together this model of here's product, here's how to go international, here's a little playbook on how to go international, and here's how to do kind of huge amounts of M&A, and you're huge in scale, right? And they brought that with the inherent kind of technical talent, which is in huge supply in Europe. So that was a very powerful thing that they did. You can startup nations across the continent. So Estonia has definitely looked a lot at Israel. France has copied a lot of, or been inspired by a lot of what's happening in the UK scene. And again, the EBRD has been huge in terms of getting money into Central Eastern Europe, the Baltics and the Balkans. Last but not least, the Americans. And we're thrilled by the Americans coming over. So I figured I'd end on that note, given it is Silicon Valley comes to the UK. Because there's the Americans have been more successful, right? And it's fantastic to have really experienced four generations of experience behind our companies, and it really puts competitive pressure finally for European VCs, and that's great to see. We need that competitive pressure, otherwise you don't improve. So great, keep them coming. So it's our view. And that's it.
Okay.
So
excellent. Thank you so much. I'm one of the entrepreneurs based here at the business school in Launchpad, and I think Oxford is an awesome place to do business. We have great quality of life, we have fantastic talent, we have incredible resources, yet so much of this just hemorrhages straight to London, and so I want to know, what can we as an entrepreneurial community do to make Oxford a place that kind of reverses that trend, to say, hey, look at our talent pools, look at the resources we have here, how are we going to attract those accelerators and those VCs and that money to make this like the next Stanford? Because we certainly have the raw ingredients, it's just that,
Yeah, and I'm going to probably say something you're not going to like. So, just a caveat. So, I mean, I'm American. I came over here, and the reason I think we've been successful is we connect into where the capital and the talent exists to begin with, and then we say, give them enough examples of companies that are building into huge businesses, and then it will come. So I think if you build too much, kind of field of dreams, let's build it and they will come, it doesn't happen. So we've taken our companies on a US roadshow and gone through, we said, great, Greylock and Sequoia and whoever, you're not gonna come out here. We know you're not gonna come out to London because you've got huge priorities with your businesses, between a 5-mile radius, right? But let us come over, let us show you what's happening over here. And as you start to, Andreessen did Transferwise and Improbable recently, Cambridge company, I think. 2. Now he has two board meetings to come out to, right? Now there'll be 3, 4. I mean, that starts to pull the people over. So I think it's a gradual thing. That's why I say I'm not sure you'll like the answer. So I think you've got to tap into what's happening in London. And so that's one part of it. I also think, the reason we exist is we do feel talent literally comes from every village, every city, but it's got to connect through the right networks, and also you can't have talent hemorrhaging to your choice of word to the U.S. either. So you've got to be able to build talent organically here as well, and build some great startups and have product teams and have tech teams and have sort of BD teams and so forth based around sort of a central ecosystem. So I think that's probably, rather than fight necessarily the money, I would focus a lot on how do you build teams of 2 that grow to 10 people, into 50 people, into 400 people. And that's what's been amazing about watching Skype especially. That's our poster child. I think when we began Seedcamp in 2007, a lot of Skype people were involved in building Seedcamp, and the whole idea was, once you have an organization that builds up to 100, 400 people, that's when you have those second, third generation, and then investors will get pulled over because that's where they are. But at the beginning, I think you've got to tap. Sorry, that was a long answer. You have to tap into those networks very actively, right?
And Transferwise, did they have to incorporate in the US in order to get the investment?
No, and it's a good question in terms of stage. So we used to take Seedcamp companies that were quite early to the US, and one of the things we've changed now is we take them when they're more Series A, B ready to the US, because US investors are just not willing to invest in seed and and light Series A into a set of companies that are 8 hours or 12-hour plane ride away, because it's so much work. And we know it as having run this now for 8 years, it's so much work in those early days. So they're not willing to do that so much. Again, there's an exception to every rule. But once you're Series B, C with Transferwise's case, it's an economics game at that point. The business model is set. The talent, there's a layer of CXO, the CTO, the CMO, that talent is set as well, and it's extremely high quality talent. So a lot of those fundamentals are set, so there isn't that pressure to have to be in California. And I think fintech is again brilliant. Going to the point of how do you build ecosystems, there is just no better place to build than in the UK for fintech. Property tech as well. It's just absolutely everything, policy, talent, everything's in its favor. So it's a paradigm shift in terms of capital is just flowing in. So that you don't have to go anywhere. You don't have to go move out to the Bay Area or Boston or anywhere else.
There was a question there, another question there. So yeah.
Thank you. I want to understand that as accelerators, you receive an application from people who've taken some finding, made a prototype, and say, look, we want to make this bigger. So you kind of receive on that end, and then you partner them up to people who might invest in it. That's your basic operational sort of mantra, right? My question is to do with separating ambition from innovation. Really, by training, I'm a neuropsychiatrist, but my other life, we've also got a medical device which we're taking to market. But we discovered it quite by accident, because there was somebody who was being fired from a department because they hadn't produced enough papers, and they were, in Peter Drucker's terms, entrepreneurs never attend business conferences, and they're the kind of people who didn't have ambition, but they had innovation. Those are two different things. My feeling is, as long as there's companies who simply receive, you're not going to find people who are so errant, so deviant that they're just not interested in this kind of thing. What is investment community doing to find those people?
I mean, it's not just the thing I'm doing here today is it goes towards a proactive effort, right? So it's not like I get to sit in London and just kind of tap on my computer. Oh, one more application, yay, 5 more applications. So you're hunting. That's what I'm doing here today, right? Is I'm hunting for the entrepreneurs at Oxford or visitors here who kind of say, they seem to know what they're doing. They've had some great successes. Maybe I should be a part of this, right? So no, we're actively hunting.
My fear is they may have dropped out, because certainly people I know had dropped out of medical school and had dropped out of business school. I don't know if that's a common narrative amongst these rock star entrepreneurs, but there seems to be a high dropout rate for people who have great ideas which other people don't believe in.
As in, they don't enter the commercial.
And they just get disillusioned. They just go, these people are not like me. They're all about, I'm creating platform A for platform B, B2B. This is not my thing. And they go off and make their own things, which may become unicorns, but often just shell.
Yeah, I mean, I think that's a long-term problem, but the best one of the best methods we found is role models. So they read something, right? And I think it's seeing the birth of MySQLs and the birth and growth of the MySQLs and the deep minds. And literally we had the head of machine learning. They're now a Seedcamp company. They came over to one of our events and said, "Would you invest in a deep mind?" So that role, a company that never even launched anything got acquired for 400 million, right? So I think you get inspired by role models. That's your sort of fundamental way to attract people who think they are definitely and probably are way too smart for, and what they're building is way too good for the sort of traditional sort of investment world, I guess. Yeah.
Well, it's actually, rather than a question, it's more an answer to what Lawrence is saying, and also an invitation to you, Reshma. The stuff that we're doing locally within Oxford now is really starting to catch up and build that community. So with the Entrepreneurs Network, the startup meetups, all of the other stuff that's happening, including Pitch Fest as part of Venture Fest and all of those things. So Pitch Fest is now twice a year. The next one's going to be in November. We had something like 16 investors, mostly from London, and 23 pitching companies at that event in February. Definitely an invitation to you, Reshma, to come along and be part of that. So we've got a scene that within Oxford that's very much starting to get that reinforcement of the community and the ecosystem, both in terms of the funding and the entrepreneurial side. So absolutely, I'll talk to you later about it, Reshma, and the sort of things we should be able to do. Anyway, we'll do it.
First of all, just to respond to you guys, the distance between Soma and San Jose and Silicon Valley is pretty much the same between Cambridge, Oxford, and London. So these aren't like mutually exclusive things, I guess. But
I was wondering if you could comment for a second on venture debt, both on the stage that companies are usually at when they touch venture debt, and then the mix of equity versus debt that companies will usually raise, and if that's been changing over time.
I really can't, but because I'm just not an expert on that, right? But from our experience, so what we see is there's usually a lot of pressure by investors in general on European startups to get to revenue and profit quite fast. So in terms of venture debt, they're more attractive earlier on because they've pushed themselves to be sort of break even in earlier than you would see typically sort of U.S. companies. So hence we do see venture debt sometimes earlier than a Series A because it's sort of the only option, but alongside Series A as well, because a lot of the startups can't. If you go with my my hypothesis that every European company raises half as much, it's a great way to be able to get the extra capital that you need. But I'm just not an expert on that space. I just wanted to make sure I included it because it's happening.
So we talked a lot about early stages, but I think one of the bigger issues you missed is the fact that a lot of the wealth creation tends to happen outside the euro, because either the companies IPO at NASDAQ or they get sold off for 100 million rather than become the next Facebook, the next Google. So what do you think is the potential solution to that big issue?
It's across the value chain, right? I think you're absolutely right. And some of our biggest frustration is we as in the community of sort of investors and so forth, and operators and angels have done a great deal to help start to fix the early stage. But it is just you hear corporates, you get around a round table at number 10, and all you hear is corporates like BT, et cetera, whining about regulations that encourage more competition. They're not thinking about how do you acquiring companies. I used to be at Vodafone doing sort of working in ventures and M&A, and our M&A strategy was let's buy more operators, not let's acquire some of the most cutting edge in devices, in software, in apps and so forth. So that has to we have to solve that. There's no M&A in literally in Europe pretty much. Rocket Internet's a good one, but to the extent of what you have in the U.S. And so that's why we go out and our acquisitions are happening with U.S. companies. So that's a huge problem. I know the London Stock Exchange is trying to work a lot on getting companies to list, but again, you don't have the same level of liquidity, you don't have the analyst coverage, you don't have a lot of that. So these are all decade worth of problems that need to be solved. But what is happening is, you have things like Rocket, which are creating a bunch of wealth, not as it should all the way down the pipeline. So I think that's where we suffer a bunch as well, is if you look at Rovio or Skype or a bunch of these companies, the wealth creation didn't happen all the way down the employee chain as such. And it happened very narrowly. And that doesn't happen to the same extent in the US. So with Microsoft, Google, Yahoo, Facebook, et cetera, the wealth creation happened a lot deeper. And I think that's a fundamental problem we need to fix. It's a lot around education and creating those option pools and making them large enough and so on and so forth. So.
Yeah, to the last questions now. So one there and then
Thank you. If you're a startup looking to raise a seed round in this day and age, say relatively small, 100, 200,000 pounds, would you go crowdfunding or would you go try to find an angel?
Both. I mean, it depends if it's a B2B or a B2C. Like B2B is hard on crowdfunding. Just they don't necessarily understand what you're trying to sell, right? So for B2C, I think it's great. The Kickstarters, which is not equity crowdfunding, but it's a great validation or seeders and so forth here. So in a way, I do both. I think 200 is quite tiny, so you could just do it as a crowdfunding. For us, seed increasingly now is about £500,000 million. So see, the definition has changed, but it's a great way to get validation. And then, with angels, you want somebody who really, again, understands what you're actually building. So there are a lot more angels. There's a lot more angel networks. So I think you do both.
A quick question here. For a startup, it's a mix of great founders plus a great idea. With your experience, what do you think is harder in an accelerator, to find a set of great visionary founders or people working on a great idea which is scalable? Very rarely do people get that mix right.
Yeah, and I think ideas wise, there's absolutely kind of no, it's equal. I think in Europe and US, there's some incredibly innovative ideas. Again, the problem comes with execution. So we have a seed fund added to our accelerator now, and the seed rounds we're doing are often guys and girls coming out of Klarna and the Transferwise, and their ability to execute is just, you see the difference between the accelerator companies, which are often first-time founders and maybe not a ton of experience. That's where it where the big gap is, and that's where the big gap is with the US as well. Is they have those, they'll often young founders, but they've done internships or they've had a lot of experience within companies that scale very fast, and so the execution, the ambition, and the execution is what we struggle with the most.
Okay, very last question. Okay, who's it?
Thank you very much for the speech, and I come from another accelerator in Tech City. And what I have observed as well is a lot of other startups around me who have already moved to Silicon Valley, mainly because of the capital. And what do you think of the pros and cons of the European startup moving to the US?
Yeah, and it's one of the things actually I didn't get to say to your point is, our fundamental belief is if two founders, two guys, two girls, pack up their backpacks and move out to the Valley, that is absolutely the worst thing that can happen to European ecosystem or European startups. So, we hopefully are fundamentally kind of trying to change that and fix that by saying you can within Seedcamp, within some of the best other acceleration platforms and angel groups, you can build your business to 10, 20, 30 people and then expand. And there's enough capital, it moves fast, it's got solid good terms, not here's 100K, give me 45% of your company. Really all the ingredients that emulate what you need to really inspire and grow these startups in the early stage. So, if we get that right, I do see that's how you grow the Spotifys and the Skypes to stay in Europe, and that's and you see sometimes, a lot of those people who move there just don't come back, and there's no reason to, because everything here is harder and more challenging and all of that. It's a better place to be. I'm here. It's a better place to be. I think it's more more diverse. It's more fulfilling in a way. But yeah, if we don't allow them to grow to 50 people, they're gone. They're never coming back.
So in terms for entrepreneurs, do you think it is in this case better to move to the Valley?
Depends. I think fintech, it's definitely not. Prop tech, it's not. So the thing, couple areas for B2C, it's hard to get support on a Europe-wide basis for your B2C business to be a brand, to be just a powerhouse, and that's why Rocket's been amazing, because they've been able to actually crack that. They've done it in a way not all of us will agree, but they've been able to do that, right? And that's severely challenging. Versus if you do move to the Valley early, you've got a very common, homogenous base to grow across, and so that it's just really hard to build those kinds of brands in photo sharing or some of those kinds of applications. So, and then if you're a very developer-centric business, that's again very difficult, because a lot of the distribution networks for developers are much stronger. Not even in New York, not even in Boston. They're literally stronger in only the Valley and SF. So that's also more challenging. But I don't want to leave with let's all move to the Valley. So that's not the message, clearly. But I think it's we need the infrastructure to support B2C companies, and that's why I think if you have founders, building Atomico, Skype or Spotify, they know how to build brands, right? And if they're the kinds of Skyscanner, et cetera, if they're the ones that are angel investing, they're adding huge amount of support to help build those kinds of B2C brands.
Thank you.
Great. So that brings this 2020 session to a close. Let's give Reshma